Anyone who's been reading the Senior Care Investor in the last couple of years has noticed there's been a big increase in sales of county-owned skilled nursing facilities. And I'm here today with Joshua Jandris. He's a senior director of the Institutional Property Advisory Group of Marcus and Millichap. And Josh, when did you embark on the strategy to target county-owned nursing facilities that really should be prime candidates for sale?
Well, Steve, about back in 2010, one of my former colleagues, Isaac Dole, who was formerly with who had left the firm to go to Aviv Reed and is now heading up Birchwood Capital, a kind of private equity and private REIT, tenant landlord type company in seniors housing, kind of found the opportunity. He and my partner Mark Myers had had seen it start to develop. Isaac had started to prepare a target list as well as a national database. However, he had left shortly thereafter. It was kind of up for grabs as to who wanted to kind of embark on this journey. So back in 2010, I kind of I grabbed the torch, and I'll tell you, it's been obviously rewarding. It's been very time consuming, but it's been very interesting. So before Isaac had left, I think had effectuated 2 transactions, and since then, Mark and I have handled 28. I think more than half have closed, but we've had 28 county engagements. I think of maybe 32 or 33 total in the whole country. Half of those being principal to principal or county to principal, and just a few being handled by other intermediaries, typically local intermediaries.
But how did you know which ones to target? Did you look up their financial statements,
Yes,
the county records to see who was losing the most money?
certainly. Well, as a broker, I mean, this is probably about half of what I focus on. So just like any other smarter strategic broker, you're going to look for opportunities. What's great about seniors housing and being an intermediary in the space is, as long as there's volatility, there's always opportunity. So if you're just looking at non-county or government assets to broker, you would look at states that are have a bed tax coming in, or Medicare Medicare cuts across the board, or Medicaid cuts across the board, similar to this space. So what we did is we looked at things at a very high level, not only on the federal level, but state level, and then all the way down to county government. So if states were implementing hard property taxes, or if states were shifting more of the budgetary responsibilities from Fed to state to county, then we saw that as being an opportunity for us to help counties. I'll give you a really good case study. A few years ago, New York. Anybody that operates in New York or that has, sold things in New York, they've been going through this. They've had, I think, 4 or 5 or 6 different iterations of their Medicaid reimbursement programs since, I think, 2010. In addition to that, when federal dollars started to be taken away, I believe it was FMAP, and it was at TARP or TALF, the federal dollars to the states, and then kind of trickled down. I apologize, I don't have it in front of me, but what we saw was obviously a larger share of cost being shifted to county governments, and at the same time, the state assembly had put in a hard property tax cap. So with the counties not being able to raise property taxes, and also their expenses growing, they had no choice but to monetize assets. And all along while this was happening, that was just one ancillary or adjunct to a much larger issue, and that larger issue was, revenues staying stagnant and expenses going up because of whether it be collective bargaining agreements that were negotiated during the roaring the roaring years of 05, 04, 05, and 06. I can't really say it's one thing, but it's been a number of things.
Okay, but I mean, it seems like about half of almost all of the county facilities you've sold are in the Northeast, and half are in New York. Are there just not many county-owned facilities in Indiana and Kentucky and
That's a great question. Indiana, there's actually quite a number of county-owned facilities in Indiana, but it's because of the IGT program in Indiana. So in Indiana, you have counties and county hospitals that partner with operators, and that system is flush with cash. States like Kentucky, I guess outside of the
I was just
Northeast.
picking. I was just picking those randomly. I mean, it could,
No,
but
no, yeah, I understand. So, outside of the Northeast, there really isn't a critical mass. Obviously, you've got some sprinkling of homes in several states, but where you have the critical mass and you have a pretty proactive legislative bodies, you can find that more in PA, New Jersey, Maryland, New York. I mean, we've handled transactions in Illinois, Wisconsin, Arizona. We privatized the last county-owned home in Arizona a few years ago, but either there wasn't that traditional or historical plan of that. I mean, a lot of these county homes started as almshouses back in the late 1800s or even the middle 1800s. So where you look at concentrations of population and history, that's where the correlation is.
right. And when you're talking to these counties, what's the most important factor in selling? Is it getting rid of that $2 million a year annual cash flow loss, or is it raising the 5, 10, $20 million of new capital from the sale that can be deployed for other uses in the county? Is one a bigger factor than the other?
Again, I think it's a number of factors. I mean, not only do you have the capital event when you sell an asset, but you're shifting liability. You're adding a property to the tax rolls, and obviously you're erasing or getting rid of a tax subsidized asset that's been there for I don't know if it's always been a tax subsidized asset, but at least for the last 3 to 5, even 10 years, they've been having to allocate money in order to keep it going. And with the many other states soon, they just don't think that it's a long term. It's not viable to continue to hold the asset. And obviously, there is a huge benefit to being able to have that capital event, and then again allocate that money to things that are really more of their core principles. I mean, there's definitely there's a little bit of a disagreement on the part of some county governments where is it our core competency, is it not? And I think ultimately the ones that end up selling are either in a position where they say, listen, this is not in our charter. This is not what we're supposed to be doing.
Right.
Or they say, listen, we're losing so much money and our sales tax revenues are down, our property tax revenues are frozen. We have to do something. And as you know, if those are the two large revenue streams for a county. And so if they have the opportunity and the necessity to monetize something besides an office building, which usually goes first, they'll send that out with the long term. They'll sell that off with the long term lease.
Right. And
Usually the next step is the
how difficult is it when you're selling these things? I mean, you've got some of these properties are losing $2 million even before debt service, and then you've got to try to convince a buyer to pay $10 or $15 million for the property. How difficult is it to basically restate the income statement, or are these buyers so sophisticated they can kind of do it? They just do it themselves and they don't have to worry about your numbers.
A lot of it is proprietary, but what I can tell you is, we've handled assets that were losing anywhere from $500,000. Right now, we're handling a property in Orange County, New York, and it's losing with everything. It's losing over about $30 million. On the books, it's losing about $18 million. We're handling a transaction in Rockland County, New York, up in Muncie or Pomona. That facility was losing $16 million. It's really a function of educating the buyers on how a county operates and them having the wherewithal and the understanding of what they can do with what's already there. So when we underwrite an asset, we always underwrite current. but then we use a proprietary formula to drive our pro formas, thus driving valuation.
Have you ever done? I know it can be difficult with the buyer. Have you ever done a post sale audit a year later to see whether in fact the costs did go down and they were able to change the census?
Yes,
That would be a great story.
we're actually we're actually doing quite a bit of that. The one of our most recent transactions was Beaver County. It was just featured in the Senior Care Investor, as well as some other national publications. That facility was losing about $16,000 a day,
I remember
and
that.
I believe $5-6 million a year. Um, Immediately following the sale, again, immediately following the sale, the buyer, which is a group called Comprehensive Healthcare, it's a consortium out of New York and New Jersey, they are looking at an $8 million profit first year. That's the byproduct of not only ramping up Medicare census during the escrow period when they took over management. They took the census, the Medicare census alone, from I believe 8 all the way up to
We took it from. Could you say that
41 or
again?
42, and then they took the Medicare census in the span of 3 to 4 months from 8 Medicare A's up to 42 Medicare A's. They're amazing operators. They've done an excellent job with that. In addition to that, what's really important to always utilize is local counsel, somebody that is very adept at working, not working against, but working with the unions. In PA, we work with a group called Capozzi Adler, and I would say that they are the best union negotiators in that region, and they've handled the union side of, I think, 4 of the last 5 Pennsylvania acquisitions that we've handled, and they've produced great results for our clients.
Now, with the economy improving, last question here, with the economy improving, less pressure on Medicaid reimbursement, are you seeing any slowdown in counties wanting to sell, or are they still having the financial problems and this is going to be going on for several more years?
They're still having the financial problems. One of the big issues, with the less pressure on Medicaid, is the plans already in place for managed Medicaid, and there's the way that counties are structured versus for-profits or non-for-profits. In states where you have bed taxes or additional quality assurance fees, things like that, counties are under a totally different plan. So in Pennsylvania, for instance, I believe they froze all counties' Medicaid rates, I think from 06 on. So while all the for-profit providers were getting the case mix index adjustments, capital, everything like that, the counties don't have that, and they never will. So that's where you have pressure, for instance, in Pennsylvania to sell. In states like New York, the economics in some situations are so dire that even if the economy comes roaring back, which I think we all know has been very incremental, it's been encouraging but incremental, they still have the pressing need. And in a state like New Jersey, counties have a unique reimbursement where they get not only your typical nursing home Medicaid reimbursement, but they have an additional add-on to that reimbursement that goes towards community public aid, community care, and it's looking like that's going to be wiped out once they go to managed Medicaid. So
Yeah.
again, the volatility is volatility.
Good. Well, I think you'll be busy for the next several years, and a lot of good business prospects. Joshua Jandris, thanks for the update on the county nursing home situation, and look forward to writing about a lot more of your sales.
Thank you so much, Steve. I really appreciate your time.
All right, take care.
Have a good one.